Look, the only reason I launch into any of the best man jokes I had is if we have any problem with our presentation. But this is our first time presenting here in Sydney, and certainly very excited to be here, certainly with the names that have been before us and following. For those of you who don't know us, Austral Resources is located 120 kilometres northwest of Mount Isa, right in that perfect copper and base metals belt. What makes Austral different to a lot of the copper players you'll either hear today or on the ASX, we are a producing copper cathode mine. We make a metal. We make an LME grade copper cathode. And again, I just want to really emphasise that because that's quite different. Together with our 2,000 square kilometres of tenements, it makes us a very unique opportunity. We've currently got $23 million cash at bank. We're ramping up to 1,000 tonne of copper cathode by July. To put that into a dollars perspective, we're cash positive and we're making $14 million a month by July. Again, just to reiterate that, the fact that we're leading into full production with cash in bank, and the fact that we're right in that beautiful belt of rare metal, base metals and copper certainly makes us a very unique opportunity. When we listed in November, we didn't need to raise capital for infrastructure. We've got it in the form of a 30,000 tonne per annum SXEW processing plant. And again, what makes us different, we don't need to refurb it, we're producing right now. We'll have a quick video here of it in full tilt. Now, as this pans out, you'll get to see the sheer size and enormity of not only our facility. Now, that facility there in itself, replacement value, $160 million. Our SXEW building onto our heap leach, that is in its size, 40 metres high, 1.6 metres in length. We're doing a quick flyover of our crushing and agglomeration circuit. Again, this here links up with belts all the way back to the heap leach, and our radial stackers then put it on top. We've got a 150-man camp. Right now, we've got 106 guys up on site. So Austral, now you've seen the sheer size of the facility, you can see why in a replacement sense, $160 million is a lot of dough, and the fact that we don't need to raise that to be producing. Key points. In January, we started our mining campaign at Anthill. Anthill as a standalone on current copper prices will do $500 million in revenue over the next 4 years. $250 million of that, free cash flow. We've got 2,000 square kilometres and we've got our tenement, and we've also got a four-pronged attack. And I'm going to explain why that's so important, that, the fact that we're producing and we've got an exploration budget on the next 12 months of $10 million or 30,000 drill metres. And the other thing that's quite unique is we are a pure copper play. By way of background, we listed on the 3rd of November. Our entire focus was to get Anthill into full production. And today, we're on track. In mid-November, we announced that Thiess would be our mining contractor for the next 3 years. December, we put our first blast through Anthill. Thiess started mining in January. And on Australia Day, we hit our first ore body, which was quite patriotic considering we just listed on the Australian Stock Exchange. We started hauling Anthill ore mid-March, and we crushed the first of our Anthill ore last week. So again, from November, we've been focused completely on delivering Anthill, and you can only be measured on your deliverables. Some high-level facts on Anthill: 4-year mine life, 40,000 tonne of copper cathode, A-grade LME metal. In February, we did a deal with Glencore. Glencore committed to take all our copper over the next 4 years. And again, we did a prepayment with Glencore to help fast-track our exploration. We also get a $70 premium above pricing. In a snapshot again, we'll produce $550 million in revenue over the next 4 years. And with a C1 cost of $7,200, again, that's about $250 million over the next 4 years. Now, I've got a short video here to give you a bit of an idea of where we're at with our mining campaign. Anthill's split into an east and a west pit, which you can see here. And a lot of you may not be familiar with the process of, turning into copper cathode. So I'm going to take you on a journey of 1 tonne of Anthill ore. So I've just been dug up by a Thiess Liebherr 994 excavator and loaded in the back of a 785 rear dump. Myself and 149 of my buddies are on the way to the Anthill ROM. So to date, Thiess have mined 5.5 million tonnes since January. And we're going to end up with, so that ore stack there, our goal is to keep 5,000 tonne of ore at Anthill at any one stage to avoid any mining in case of mining delays. Now, I've just been dumped into the back of a quad road train. So this is actual footage taken last week. And I'm starting my 44 kilometre haul back to Mount Kelly ROM. Fortunately for me, it's a pretty soft ride because I've got bitumen all the way. Again, de-risking our project during wet weather. I've just arrived at Mount Kelly ROM, 125 tonne in each one of those, or around $14,000. At 40 trips a day, we're moving around 500,000 tonne of material. Now, I can't show you the full crushing and agglomeration circuit, otherwise I wouldn't be here presenting today. So here's a quick flyover, which seems to have frozen, of our crushing circuit. But fast forward, I'm then put onto the radial stacker, I'm up on the heap leach, and again, unfortunately, the footage there you won't get to see of the plated copper, but you know, we're currently on a 60-day leach. We're recovering 60% of us, and on 270-day, we're recovering 85%. We're then loaded onto a truck, put through the facility, loaded on a truck in a 50 kilo plate of copper, and I'm off to Townsville before I'm handed over to Glencore. Anthill production and timeline. Look, the key points to really note on this are the fourth line from the bottom and the bottom line. So the fourth line from the bottom, Thiess commenced mining in January, and you can see we did 175 tonne in January. That's from an existing mining campaign. I mentioned earlier we crushed the first of our Anthill ore last week, and you can see how quickly we ramp up. So in June, we're at nearly 700 tonne. By July, over 1,000 tonne. So that's $14 million in a revenue cents per month, or gross sales of about $500,000 a day. That really leaves us a lot of cash to go exploring, doesn't it? So that's about 130 mil in a revenue sense. You know, come July, we're on the march. Something else to note, our facility is only working at a third of its capacity, and that'll become really, I guess, important once I touch on our exploration. Capital structure, very quickly, don't want to run out of time, I've got so many more videos to play. Market cap's 96 million. I mentioned we're going to have free cash flow of $250 million over the next 4 years. Cash at bank is, from memory, 23.6 million. Executive and directors hold a large portion. And again, you know, our focus is certainly on using our cash to pump our exploration. So I mentioned earlier we've got a four-pronged attack for our exploration. So our immediate focus is to extend Anthill mine life, keep those oxides coming through. Part one is Anthill 2.0. Now, I'll have a slide shortly that will show how underexplored Anthill area is in certain areas. Our second part is exploring part of our 2,000 square kilometres for further oxides. Thirdly, monetising our sulfides, and we've got a lot of them as well. And finally, JVs. This slide's super busy. What I suggest is find us at booth 34. Steve and the team can walk you through what that actually means. In short, budget $10 million next 12 months. Drill meters, 30,000 metres. That's our goal. And I'm going to walk you through where we're going to go and do it. Anthill 2.0. The blue lines are those pits, the east and the west, that you saw on that quick flyover. The blue speckling is existing drilled. And the areas that really excite us are to the north, northwest and the west. Now what's really interesting to note, there's a lot of structural areas there that certainly need for us to focus on. So that's our first pass. Second pass for us is further oxides. Now, if you remember our capital structure, I said we've got cash at hand. So our goal is to run, you know, our exploration team. We've now got a crew of 6, a great mix of young and old, and we're going to be running these, you know, parallel to each other. And again, that's quite unique to have a budget of that much, and I guess that's the opportunity that presents once you are producing cash. So now we've got three that are our immediate focus, and I'll tell you why, because they're not as sexy as some of the ones I've heard, but for us it's about just finding more ore to feed into that plant. The fact that we're doing around 10,000 tonne per annum, we can double that with some of these low-grade ores. First one, McLeod Hill, 1.5 million tonnes at 0.5% grade. Again, not sexy, but it's about putting into that plant and just getting metal out of it. Our second one's Dividend. There's a large geochemical anomaly there. We've committed 2,000 metres to that, effective immediately. Just on that first one as well, the other thing that's really important to note, it's on an existing mining lease. Well, we can crank that up immediately. The third one, Drifter. Drifters, we've had, so these are off previous drill results, and we're going back in there now currently. We've got good hits of over 2%. Again, another great opportunity to keep pumping through our plant. 4 minutes. Okay, now are we playing that little one? So we've got a great opportunity here to monetize some of our sulfides. We've got 330,000 tonne, which I'll touch on after Ed talks.
How we make metals. Our job here is to turn this rock, which is chalcopyrite, into the metal copper that we use every day. The traditional routes for making copper from this mineral involve melting the mineral at high temperatures, basically smelting it. And we're offering an alternative way to do it, which can be done here in BC, so that we don't have to sell raw products outside of the province. So we believe that this technology is a cheaper, less capital-intensive way and more environmentally friendly way to extract copper from minerals. And we believe that it will unlock multiple resources across the province and across.
Jetty Resources have been able to do a lot of trials and figure out how to process sulfides through an SX-EW heap leach facility. Now, the fact that I mentioned earlier that our plant is running at a third capacity, we have 330,000 tonne of contained metal in sulfides and transitional in a JORC-conferred mineral resource. Also, we've currently got no value attributed to that, and that's really exciting. The fact is that if we can process our sulfides on our existing facility, it's a game changer. No money to be spent on infrastructure. And this video here, we've got 5 existing pits. All the overburden's been removed, aka oxides. So absolute game changer. This slide, again, mindful of time, come and see us at booth 34. And to be honest, I'm not a geo. Steve Tambanis, he'll be able to, that means a lot more to him than it does to me. I guess that I mentioned on the Flying Horse pit, you got to see in the flyover there, the fact that, you can see all the transitional and sulfides sitting in the walls, and the fact that all that overburden's already been removed. Sorry, we just skipped over one very quickly because I got 2 minutes, I'm miles ahead. So we've also got a lot of opportunities with JVs. I can't touch too much on them right now. We've got some really good news flow that I think you'll see in the coming couple of weeks in relation to stuff that we've been working on for the last couple of months. Highlights, key points, key takeaways. We've got infrastructure valued at $160 million. It's operational. We don't need to refurb it, it's up there and running. We are a producing copper mine. We're producing today, and we've got 1,000 tonne a month coming online by July. At $140 million worth of revenue, that's very, very, very profitable. We're fully funded. We've got 23 mil cash at bank today. We've got free cash flow over the next 4 years alone of over 200 million. And we've got 2,000 square kilometres sitting in some of Australia's best base metals country. From a value perspective, we're currently super undervalued. Booth 34, come and see us, load up on AR1. That's us done. 1 second to go.